Thanks a lot, Chandan, for joining in. Have a great day. Dipan Mehta, Director at Elixir Equities, is joining us now to discuss all the fundamentals of the market. Dipan, good morning. I don't know if you heard the management of TCS, but they were quite unequivocal in their view, right? I mean, there is a slowdown and clients are deferring their spending, especially in areas like BFSI and manufacturing. How are you feeling about the stock now?
Yeah, Sonia, good morning and thank you for having me on your show. Yes, of course, I was hearing them quite diligently. And what I heard, I'm not that disappointed. I know optically the numbers are not that great, but the earnings per share year on year is up 16%. And how many companies of the size of TCS can deliver 16% type of earnings growth at that size in such challenging times? So there's some benefit of course, the depreciation which has come in. And I'm quite confident that going ahead, they'll be able to improve the margins. And most importantly, I think the order wins ensure that the later quarters, we should see pickup in growth, and some amount of base effect also will come into the quarters, the third or fourth quarter or so. So I'm not that pessimistic. And if you have a 1 year type of a view, I feel pretty confident that TCS may outperform the Nifty and the Sensex, as it has been underperforming for so many months. But that trend may change pretty much soon now. So I'm pretty encouraged. Today, how the stock price may trade is anybody's guess. It may decline further because optically the numbers are not that great.
All right, and between the two, Infosys and TCS, which one do you prefer? I ask this because Infosys has underperformed, Dipan, and also valuation-wise, it's a little bit cheaper.
See, I think Infosys has been more aggressive in terms of order wins, and if you compare the order wins over the last 3-4 quarters, I think Infosys has scored the best amongst its large cap peer group. Under the new CEO, it's I think a little bit far more aggressive than it was before. Valuation comfort also is there, and I think what we are seeing from TCS and Accenture earlier, I think similar may play out in Infosys. End of the day, I think we continue to see great secular growth in TCS, Infosys, and their likes. Valuation is not out of whack over here. And I think that if you can deliver that 15% type of a bottom line growth for the next 3 to 4 years or so, that's the kind of returns that you can expect in these large cap companies. And I think that's pretty reasonable because there's some element of safety also in buying into these companies because end of the day, these are typically a little bit like annuity businesses and one should keep that in mind.
Dipan, hi, morning. The other bit of positive news that we got was that inflation here in India is down sharply. Year-on-year numbers are down sharply as compared to the previous month. And it maybe gives more credence to the fact that, the RBI will stay on hold. Rising interest rates are not good. What's your own sense? I mean, unless, of course, you have a weather shock or some such thing on the rains front, if that messes things up, that's another thing. But this is good news, isn't it, overall?
Yeah, Prashant, absolutely. And I mean, it's just one reading, but I hope it's a longer term trend where inflation has perhaps peaked out and now will drift lower and lower. And it puts into perspective the pause which the RBI took when they announced their policy. So it's a great number to track. And I think if inflation fears are put to rest, then you could have a very decent rally for the rest of the year or so. I think last 4 or 5 days trading session has been very, very encouraging. We were at very key support levels, and had they been broken, then we would have been into a medium-term bear market. But the market, thankfully, has turned around from there. And maybe we are entering this earnings season with a little bit more optimism. Caution, of course, but a little bit more optimism. I'm quite encouraged by all the pre-quarter releases which have come from NBFCs or from consumer-oriented companies like Titan. And I think TCS number is not bad. It's like a toy which is being wound up continuously, and at some point of time, it will start to play out as and when the environment improves and implementation of projects start. And that may be true for a lot of IT companies. And IT has a big weightage in the indices. And if that starts to perform well, then you can see the markets even gain further on these kind of levels which it has achieved.
I mean, look at the TCS stock, by the way, in the pre-open session. It's down marginally. I mean, it's not very... I mean, it may deepen as the markets open a little at about 9:50.